Many traders were looking for a late February, early March taper, but the Fed came along yesterday and surprised us with a token taper. Russ Greenspan, a trader in the interest rate pit from the floor of the CME Group, you actually called that correctly in mid-November, expecting a token taper for December. What were the clues from the interest rate markets, and what are we looking for 2014?
Just some of the clues, I suppose, were that in the options markets and in the futures, we started to see some steepener plays that were sort of bigger than expected and just caught our attention. We saw D5, D6. Somebody put on a lot of steepeners. We heard a rumor it was PIMCO. We thought, PIMCO, they know something. So we started to sort of pick our head up about that.
Right, and that's why I feel like it's very important for equity-only investors to look at multiple markets and options and futures, particularly with interest rates, because that gives you clues as to what's going to happen with the S&P overall. So now let's shift focus. What are we looking at for 2014? Where are the trades right now?
So we got to keep looking at the interest rate complex. I think the equity market participants were somewhat caught off guard by how the market responded to taper, and that's just, I mean, I think maybe people were positioned short, expecting the market to sell off. As far as the interest rate complex goes, we're really got to wonder how steep are we going to get and how fast. Is the Fed going to keep tapering in January? Are they going to announce another taper? How about March and April? And then one thing I've noticing today is we're really not seeing the 30-year sell off with the rest of the Treasury complex. And so we got to keep an eye on that. How is the 30-year going to stay bid going forward? And is that eventually going to put a cap on yields in the 10-year?
All right, excellent work, Russ. Thank you so much. For The Street, I'm Jill Malandrino.